Market tried to make a push pre-market and failed. You can see it from here. Pushed into this demand zone, hit this descending daily trend line that's been drawn for a while. It's funny sometimes how he reacts to the peak. And he gave 100 points. And I think we have some more down momentum coming. So let's go.
We are in a wave, in a phenomenon, as I call it, I've never seen before. That it's not cyclical. It is, as you put it, Jim, secular.
Right, you're talking about railroads. You're talking about internet. You're talking about this. You're talking about the fourth industrial revolution.
I'm talking about critical utility for society. We're talking about generative AI. Now, I don't try to sound a bit hype, but you think about it logically. The GDP of globally is about 110 billion, give or take. 100 trillion, sorry, 110 trillion. Fully 30% of it is value from industries related to knowledge-based technology intensive. And you put in generative AI, you create intelligence in a lot of other aspects of society. That 30%, say, will grow to 40% of all GDP. That's 10 trillion a year.
That's Broadcom's Hawk Tan talking to Jim last night about the impact of AI really on the macro economy. Jim, your takeaways from that chat?
Well, look, I think it's that you don't have Hawk Tan saying anything that is pie in the sky. He's just talking about a major step change in how the world thinks. Is something that Jensen Huang's been saying too. But here's an example. In the time since we've been discussing this, and David, you'll love this, Walmart announces a partnership with OpenAI to offer shopping cart on ChatGPT. This is in addition to what we know from Etsy. This is a direct attack on Amazon. And there isn't a vertical that OpenAI doesn't want to go after. And this is a good example. Every time we want to say pie in the sky, Walmart, you want to own Walmart today because you're going to make this announcement with OpenAI and ChatGPT.
When you speak to the people at the center, just like Hot Tan, Carl, they indicate that AI and entertainment essentially will change everything. That seems to be the overall theme. And that's why you have the capital following that belief.
With that, let's get this
should be done. When I was talking with him, he spoke up the orthopedic this morning. Because there's not a lot of science to new knees. There just isn't. They haven't developed anything. It's keeping their price earnings multiple back. It's another brilliant move. The spin-off of Kenvue, obviously, looking really great. Hindsight 2020. Who knew that RFK Jr. was going to go after Tylenol? But that was a remarkable quarter. They are the fast-growing pharma company. I think that J&J is the paradigm shift that we've seen, which is you got to get rid of anything that doesn't grow quickly. Look at that. Look at that chart. This started, by the way, when they decided to fight the plaintiff's bar on all the talc cases, where the plaintiff's bar was saying the talc had asbestos in it. They have not been winning all the cases. They just lost one. But what's happened is that they're no longer negotiating over some gigantic settlement that could really hurt them. And instead, they've become pure pharma, no longer orthopedic, and again, no longer the generic. David, this man has quietly put his stock in a position to challenge Eli Lilly for growth. Incredible.
It is. And to your credit, because I do like to do that when you deserve it, you did kind of get more positive on the stock here, particularly as you just said on the court case side and that whole talc thing. And that's been rewarded with that move up lately. By the way, J&J shares had done what? Virtually nothing for years, right, Jim?
5 years. 5 years, nothing. And they had this thing hanging over them. And when you talk to the plaintiff's bar, all they ever talked about was like, be careful of that dividend. Be careful of that dividend. Where this thing should be, the growth of this and the wealth of this should be shared equally with the plaintiffs. And I got caught up in that talk, but they because they weren't fighting, they were negotiating J&J. Well, Joaquin doesn't seem like he'd be the toughest guy on the planet, but he's taken on the plaintiff's bar, and it's worked. It almost never works, David. It's working for him. And the spin of orthopedic is a brilliant move because, boy, that's a slow-growing part of their business. David, one day you might need new knee, new hip, whatever, but you're going to be surprised that they're kind of similar to the way that they were.
Got some puts there on that retest.
Oh, that's not good. All right,
Hopefully we have some continuation.
All right, Jim, speaking of
It's too early to go too big.
praise for Charlie Sharp and
I knew you were going to do that to me. I knew it.
It's the only notable winner amongst the sector this morning after we got earnings from Goldman Sachs, Wells Fargo, JP Morgan. Obviously, momentarily different part of the world. We'll get to BlackRock, but Goldman and JP Morgan both down their stocks. Goldman the most, and obviously they also did that deal. Not sure we really mentioned it, where they acquired Industry Ventures for about $7 billion. It's a VC firm. Interesting move on their part. But Wells Fargo stocks up over 4% on earnings.
All right. So what Charlie had said pre-Charlie Sharp, I make a Charlie like Jamie. I know people say Charlie. I mean, was he talking about Charlie Chips, the potato company? No. Just a second. Here's the deal. Charlie was constrained. The bank was constrained because there was a cap that was put on by the Federal Reserve right before Janet Yellen left. And it really kept it so that they had more and more capital building. They weren't able to distribute like how they would like to. That cap's now going.
They're funny that it's holding the level by the pip too.
Greater earnings machine.
It seems to be these levels that we draw seems to be more respected on regular
Accelerated the buyback as you realize
sessions.
$30 billion in excess capital, David. This is such a
The demand and supply zones.
$30 billion in excess capital. It can be deployed anywhere he wants it. So Charles got great
Doesn't want to
flexibility.
give.
The model's good. A lot of investment banking, a lot of credit card.
It's gonna do.
To Charlie's credit, he's made this what turned out to be a sleepy mortgage issuing bank into something, a bank that I think we're going to start thinking of as one of the majors in terms of when it comes to corporate finance. David, they were never a corporate finance power. Some of that is the people he brought over because they didn't get. Look, Jamie didn't retire. There are a lot of people who thought they might get that
That
job.
is true. Yeah, that's true. No, of course, Doug Bronstein, who I've had on the show, and any number of other very senior bankers at other places have come over there to really try to create a more robust investment banking franchise for Wells Fargo, Jim. And you're again, and by the way, notable as you just said, what have they? $6.1 billion they spent in the third quarter to buy back stock. So that resulted in almost 75 million shares being retired.
I was thinking it was going to be more like 4 because he was so lukewarm when it happened last time. The stock deserves to be up. Today's not going to be a great day. And JP Morgan does not deserve to be down 8, but it had spiked on the $1.5 trillion initiative that was announced yesterday that I didn't get to talk to you about because I thought you would have loved how it was for every speculative area of the economy. Definitely critical minerals.
All right, you want another stock that's up? BlackRock, up about 1.3%.
I guess you just have to beat everybody to do that, don't you?
Yeah, well, they did shatter their own records. Assets under management up 17%, just a hair under $13.5 trillion are now managed by this behemoth. That was for the third quarter, of course. $200 billion in new client money, or more than that, actually coming in. Joining us now exclusively here at Post 9 is the company's chairman and CEO, Larry Fink. Larry, good to have you here. Thank you for being here.
Carl, David.
And Jim will probably ask some questions as well, no doubt about that. I guess, it seems as though things are working on all fronts for you. Is this as good as it can get, Larry?
Well, it is gratifying. I mean, what really identified us in the third quarter, the breadth of where we grew. It wasn't just one business area. It was from cash to a systematic equity or AI-based equity team that grew $30 billion over the course of the year, $10 billion in the quarter. Crypto, our digital asset platform, our private markets platform, our investment technology grew as fast as they have in many, many quarters now. And then, just across the board, ETFs, record quarter. So it was not just one product area. It was not just one region. It was a completeness. And I think it comes down to the whole portfolio, the entirety of a conversation. When we bought BGI in 2009, no one thought you could marry passive and active. Well, not only we did that, we've transformed how a portfolio is being engaged. And now with passive, active, publics, privates, and then we overlay investment technology, and now digital, we're the firm that more and more people are going to worldwide.
What do you mean by digital?
I do believe we're just at the beginning of tokenization of all assets, from real estate to equities to bonds across the board.
It's very loud here.
It is very loud.
But it's good. Capital's at work, Larry. You like that.
I love capital at work.
Yeah.
But there's $4.1 trillion of money sitting globally in digital wallets. A lot of that money is outside the United States. If we could tokenize a ETF, digitize that ETF, we could have investors who are just beginning to
He bounced from the pre-market low.
get through, let's say, crypto.
So gonna give the shorts a little scare now,
them into the more traditional
or just shorts taking profit too.
So we look at that as
It's a
the
good
next
target.
wave of opportunity for BlackRock over the next tens of years.
Yeah, that was a good
As we
target
start focusing, moving
for a
away
quick
from
bounce.
traditional financial assets by
Bar over
redefining
bar.
them in a digital manner, and then having people stay in that digital ecosystem. They can have their cash, and we have the largest cash money market
15.
fund that's tokenized called BIDL. Our Bitcoin IBIT is now over $100
$100
billion.
billion. I
Yeah.
know.
Wow,
Nothing.
hit a new high. Wow,
2 years ago, zero.
Yeah.
So
I know. Well, you were
That's
always a
kinda-
huge proponent of crypto, as we know.
kinda strong.
I grow and learn.
Why didn't you say that on 60 Minutes?
I did say
Yeah.
Jim?
Yeah, Larry, I wrote How to Make Money in Any Market. A lot
did?
because of our talks. Yes, a
Yes,
lot because of
thank
what you did. And I dedicate a lot of it to you because I say that people don't know how to invest. People feel that their parents are going to be richer than they ever were. Do you feel that your offerings, if people were to embrace them and work at a company that had this, we could kind of change this world where the younger people will spend more money on poly market betting about whether some, on some political event, when if they go with what you have, they might be able to, through savings, be better, be wealthier than their parents.
So a great statistic, if you put money to work on January 1st, 2000, and a year later you had you had the dot-com crisis, 6-7 years later you had the financial crisis, you had the COVID crisis, you still would have made 8% compounded over that entire 25 years versus earning 1%. It is so compelling to be in the market, and this is the story. It's not about if our market's going up or down. is there a bubble in crypto or is there a bubble in technology? It's about being in the market throughout the cycle. Even if you put money in the United States in the year 1900, and then you had the Great Recession, you had the Depression, you had all these things, you would have earned over 9% over 125 years. So I'm not here to tell anybody if the markets are going to go up or down, but over a long horizon, and every individual who's thinking about it should be focusing on these opportunities. And I'm absolutely thrilled to see more and more young people investing in equities, not just Polycon. They're investing in equities. And if they can now translate that from just a trading and flipping account into a long-term investment strategy and be an owner of those over long horizons, over your lifetime, you're going to do really well. And another interesting point, I think I said this before, but over a 30-year cycle, if you earned an extra 0.5%, over 30 years, 0.5%, your retirement pool of money is up 15% more. Just a 0.5%. So the virtue of compounding over 30 years, there's nothing more important. And Jim, you write about this all the time. This is what it takes. It's about being in the market, being focused on this over a long horizon. And the young people who are worried, they're not
New
going
low.
to worry about it. America still is the best place in the world to invest. And I would be
Like 2
continuing to
pips.
invest here today.
Totally agree.
I don't know if it's gonna hold, boys.
Long term, we don't want trading. Trading is the bane of our existence.
If I go long, I'm gonna have to watch some type of reaction out of this. This is a previous all-time high from like a month ago. This zone was completely ignored by that big drop, but I feel like it's still valid. Yeah, it's hard to buy a call right there, you know,
Of how we integrate organizations, like really find people like
because then my risk has to be 5 points, and I don't want to risk that.
the majority of the consideration BlackRock shares.
Let's see how this reacts down there.
Shareholders now, they want the entirety of the firm to be
I
part
got
of
some,
that integration process.
wow.
And that's how we build one firm, one organization. And I would say our quarter also shows so importantly that clients want to talk to firms that can bring the completeness to them.
Yeah, this is gonna fuck.
Equities, private
Wow.
credit, infrastructure, passive, active, and now crypto.
Yeah, are you worried at all, though? I mean, I think privates and all 660 billion in AUM for you guys.
Yes.
It's not an insignificant business anymore. You built it pretty quickly.
We're in the top 5 in that business
Yeah,
now.
but there are starting to creep in at least some concerns. The First Brands bankruptcy,
Sure.
it's maybe a one-off or Tricolor,
Yeah, guys.
Jamie Dimon's talking about, but
Shorts taking positions at the 6,600.
into this, and that the underwriting standards perhaps are not what people
That'd be might be another short, but
I'm always paranoid and concerned.
I don't know.
But actually, credit trends recently
That's
are
the other
actually
level.
improving.
fuck.
So let's think about the private credit market, because that's what you're referring to, David.
I don't know, guys.
Outside the banking system, private credit is about $2 trillion.
Damn, this is
of which
looking
about
gnarly.
$2 billion of that $2 trillion is asset-based finance, and then you have receivable-based. Both Tricolor really receivable financing. So that's a very small component. Most private credit is no different than the type of lending that you do at a bank. They may be companies that want to remain private longer, but the underwriting would be no different than a public underwriting. And so we're not seeing any really remarkable changes in credit trends.
That was stupid.
But you're always going to have
Oh god, that was so stupid. Why did I do that?
and by the way, that is capitalism. The capitalism is not meeting 100% successes. There are going to be failures. And when there's failures with
Okay,
bad leadership who
my Weibo is
are with
acting up.
questionable accounting practices, whether there's fraud or not fraud.
Sometimes it doesn't let me change from puts to calls, and I bought the wrong thing.
You can't hide that
I
long.
thought I had
And I actually
puts,
believe
and it was
it's a
calls.
gratifying thing. You can't hide long. Now,
That
obviously,
sucks.
losses in these two
That's alright.
examples
I mean, it would have worked out.
are companies that are
But yeah, fuck that, right?
private markets. And right now, we're
So we got calls, we got puts. Okay,
retirement savings of
I'm on
Americans.
puts now. All right. Okay.
Concern necessarily that you're introducing a higher
Okay.
level of risk with less
Oh, that was a bounce.
you are introducing instruments that have less liquidity. Let's be clear.
Right.
Everything you invest in has some types of risk. If you start incorporating more private market products in a portfolio, they will present you with less liquidity. So that's a risk parameter that one has to measure. So that means you should not be investing in 20 or 40 or 50% of a portfolio in that. Getting back to this, if you could add an extra 50 basis points in a portfolio over 30 years.
What do you need daily liquidity
So if you
for,
could
right?
invest 5% in these products, could that be additive over a long portfolio composition? And so that's how I look at it. But one other thing, we did another acquisition in Preqin, which is the largest private market data company. We believe for the Department of Labor to allow the insertion of private markets in 401ks, it's going to be hard for them to really move the fiduciary standard rule. And the fiduciary standard rule is a very strict rule. You have to be considered a fiduciary in everything you do. So that under that law, you're not going to put an excessive amount of amounts of money in privates in these funds. But more importantly, you have to justify every investment. Therefore, we believe one of the great growth engines of BlackRock will be the Aladdin system with Preqin and our eFront business, because you're going to have to justify every investment you make, and that's going to be through data and analytics. And we are going to be the engine that powers that data and analytics.
It's a great report out of Goldman today looking at the split between employment and GDP, and they argue that could be normal for a while, that we might, based on productivity gains, but
Yes.
you might have robust GDP growth and troubled or challenged labor. You think that makes sense?
Well, I think if you look at BlackRock's growth, we're growing. We're adding anywhere from 1,000 employees a year right now. But that being said, we're growing faster than the growth of our headcount growth. So we're doing more with fewer people. I think that's a generalized trend. Technology is making us more productive, and we're able to do more things using technology. So I don't think technology substitutes humans, but they augment humans.
Yeah.
But that means we probably need fewer future hires to the scale of business that we may be operating. And I think that's going to be with everybody. We have just better information at our fingertips. We're going to be able to do much more coding
Well,
and
AI is
analytics.
already taking care of a lot of coding, for example, and there's so much more to come. Larry, I did, because we're going to run out of time, I did want to just get your take on the broader AI picture. I mean, the amount of money that is being committed by OpenAI, for example, is what we've been talking about, to companies, and just the enormity of this capital. I don't know if you've ever seen anything like it in your career, and I'm curious as to how you view it and whether you think...
As long as they're trying to
bubble
stop people out right there.
in that usage.
Well, there's a bubble in investing.
Let's see.
Are we inferring
It's a
bubble?
big 5-minute candle.
There is certainly
I got one little put, so just it on the EMA. I might be stopped out right now.
geopolitical positioning. We as a country need these investments if we're going to be the
I'll hold a little bit.
AI technology. So as an American, I'm pretty happy that we're investing this much money. I want us to be first. So let's start there. Does that mean, is there going to be some failures within the confines of these investments? Absolutely. But I do believe we are going to have to invest these huge sums of money. If you think about that, investing in AI does not just mean investing in GPUs and chips. It means investing in HVAC
Yeah, it was that classic extra push to stop people out on the obvious spot, and then another leg down. Let's see. I'm gonna hold this position for a little bit.
We estimate just on data centers and
It's
power
looking
and all that.
really bouncy, but let's see if the shorts keeps it down.
In advance. I can say at BlackRock, the amount of information that we are trying to generate ourselves and the speed at which we want to generate, we're spending more and more on it, and we're getting good results on it. I believe every major company is going to have to be spending more and more on this. I think some of the investments that we've seen so far is not on AI, it's more on cloud and the power of the cloud. So I do believe I don't believe this is a bubble, but I believe this is capital that in most cases is going to be well spent. That being said, will there be one or two failures in that? Absolutely. And that is capitalism. We're going to have some big winners and we're going to have some big losers. And obviously we have to, but if you have a diversified portfolio, you're going to
Both markets, both future markets are very in sync, and Q's NES, QQQ, and SPY. Sometimes they move separately, but today they are pretty in sync. Like exact same candles, you know.
The transformation out of Oracle, what they're doing, and how Larry is trying to transform it. Broadcom, what Hoxton is trying to do. I actually am proud of the U.S. footprint in this, and I do believe we're going to need to spend this money to win on a geopolitical basis.
All right, I want to give Jim the last word here. Last question to you.
Yeah.
Yes, Larry, when you've been on, I think when you've been on the last couple of times, you talked about public-private partnership, the need to be able to have something bigger to be able to attack the deficit, which continues to grow. Are you seeing that? And is this administration helping that?
Well, this administration is very open to all businesses to talk to them to try to find ways that we can build our economy. So, there are many conversations going on with this administration. That being said, I mean, you're rightly in noting that the greatest risk we have is for the U.S. economy is
Wow.
deficits. And
The lungs are trying hard. Look at that.
For the next 10 years, our deficits are going to overwhelm this economy.
This is looking scary for the shorts.
By unlocking private markets, if we can unlock private capital,
New high, I gotta be out.
by 3%, I'm not worried about the deficits. That's a big that's a big leap for our economy. Our scale
Wow.
to grow 10%, 3% a year.
Completely blew me out, boys.
Big issue. And so, we need to be focusing on how do we unlock this capital. We need to focus on how to build this out. This is why I love
I'll
this
do a little bit of watching now.
Why I believe we need to be building out our grids, building all this out. This is the type of stuff that could power a 3% economy. If you look at the second quarter results, 3.8% GDP in the second quarter, 50% of that was capex on technology. You know what? But if you compare that to Europe or other places in the world, we're the only country that has this type of capex. That gives me confidence that we're going to win. And when I go around the world and talking about other economies, when I don't see that capex happening in their country, I worry about that future.
Well, we have the capital markets to support it, and I guess they don't. Larry, we'll always continue the conversation.
Thanks,
we hope
guys.
as well, but appreciate your being here today. Thank you.
Thanks, everyone.
Larry Fink, Chairman and CEO of BlackRock. Call.
As we go to break, about 1 to 2% declines this morning across the board. VIX back to 22. Brett, there's about 3 to 1 negative, and you can see bonds. That 10-year back to 403, almost kissing 4 today. Would take you back just several months. So back in a minute.
Yeah, I'm gonna be blown out right now. Wow. Wow, boys. I just got completely blown out. Went from 100 something up to, wow. This is a strong move back up. Okay. Going against the trend, huh? That was funny. But it's alright. It's alright. Let's watch. Let's get back to it. Ooh. Yep.
what's on Matt tonight?
I know we're truncated, but I've got Domino's. Russell Weiner mentioned him earlier. I've got Salesforce because this is Dreamforce. I have Okta. It's Todd McKinnon on cybersecurity. And then I have Julie Sweet from Accenture. Let's see if that stock hasn't gotten too cheap. There we go.
Busy week, just getting started, really, Jim. We look forward to it
Very excited.
tonight and all week long. That's Jim Cramer
Thank you.
out west. When we come back, Sarah's interview with
Yeah, once you're on a short position, you see the fail the long positions coming through. You know, the long setups right here. This was so long right here. Tape is strong, boys. Tape is strong. See how this next 5-minute candle closes. If it closes above that, above 66.32, we have a chance now. Little pullback.
Good Tuesday morning. Welcome to Squawk on the Street. I'm Carl Quintanilla with David Faber here at Post 9 of the New York Stock Exchange. Sarah Eisen is live in D.C. Will bring us an interview later this hour with European Central Bank President Lagarde. Busy morning for Sarah in our nation's capital. Meantime, some weakness giving back almost all of Monday's bounce. Dow's down 400. Goldman taking about 200 points out of the Dow this morning. You can see the 10-year back to 404, although off of the morning lows. Bank earnings this morning showing some investment banking's back. We're going to drill down in some of those key reports. A new report says the Manhattan office market is coming back. We'll talk to one of New York City's largest real estate owners about what he's seeing. And then there's Etsy moving its listing here to the NYSE today. The CEO, Josh Silverman, is going to join us, talk about the move and how it's incorporating AI into its business. Sarah, what's going on in D.C.?
Well, what's going on in D.C. is we're having all the conversations that investors are having right now about the economy and the outlook. You'll hear from ECB President Christine Lagarde. You'll hear from the U.S. Trade Rep Jamieson Greer. Ambassador Greer with me in the next hour as China-U.S. tit-for-tat trade concerns take center stage again in the market right now. But guys, I wanted to highlight the data point of the day. we're lacking economic data in this government shutdown here in D.C. because that's not happening here. But we did get NFIB, the National Federation of Small Businesses. Basically, they give their optimism, pessimism report, and it was a step back. It actually saw a decline for the month of September, the optimism index overall for small business. But you can see on the chart here, we're still not too far from the highs. The recent high was 104.5 back, in February 2020. 93 is kind of the average in 2024. But it is notable that there was a deterioration in September. The uncertainty index rose to the highest level since February in that index. I don't know, guys. When my kids have meltdowns, we ask them, is it a big deal or a little deal? This one feels like a little deal, but it is worth watching when it comes to the way small businesses are feeling. Not as bad as they could have been, given all of the tariffs, but something to watch as we sure monitor the economic signals to find out if we're heating up or if we're cooling down. There really is some debate on that, Carl, right now. And I would just note in here, more firms planning to raise prices, so we're going to be on the lookout for that on inflationary worries, but also more firms planning to hire people. And that is notable, given some of the concerns about a soft labor market.
Yeah, one thing we haven't gotten to yet this morning are some of those tariffs on lumber and kitchen cabinets and vanities, which go into effect, not to mention some of the heightened rhetoric out of China in the last 24 hours.
Right, which is a bigger deal for small business if it has to import, kitchen cabinets or lumber or anything from China. They just don't have as much scale or diversity in the supply chain as some of the bigger businesses. So that, it could be what's being reflected here in the rising uncertainty. Jamie Dimon, of course, J.P. Morgan chief on this morning coming out with earnings characterizing the economy. He mentioned the slower jobs market, but then described the overall economy as resilient. He says, while there have been some signs of a softening, particularly in job growth, the U.S. economy generally remained resilient. However, there continues to be a heightened degree of uncertainty stemming from complex geopolitical conditions, tariffs, trade uncertainty, elevated asset prices, and the risk of sticky inflation. So that really summarizes, I think, what you're seeing in things like the small business survey. It also really gets at what you'll hear from in just a few minutes, Christine Lagarde, the head of the ECB, talking about concerns about some of that uncertainty influencing the real economy.
Yeah, Sarah, I'm looking forward to you talking to Jameson Greer as well. It's not as though China trade is not having a significant impact on our broader equity markets right now. Certainly some press at least seems to indicate the hopes of sort of getting back to a more constructive level of dialogue. That may already be happening, but I'll be very curious to get his take on where things stand in terms of the rare earth licenses that then triggered the response of the president of another 100% potential tariff starting November 1st.
Going against the grain, guys.
That's in Money Movers.
That's what the fuck is up.
In Washington, so you'll have to tune in, David. I know you always do, even though you leave set. But I think, and now we have this new sort of issue of the U.S. subsidiaries of South Korean shipping companies being not allowed to do business with Chinese companies. So just more sort of back and forth, who has the leverage, and China has vocally opposed the threats of tariffs from the U.S. So does that make the U.S. do anything different? I think we're all on alert for any kind of post on Truth Social for President Trump in reaction to that. And is President Trump and President Xi still on track to speak at the end of the month? Remember that? That's a big question, I think, that investors have. So hopefully we'll get some answers.
Yeah, it doesn't seem to suggest that meeting is still on track, but we don't know for sure. And as you said, a lot of the commentary over the past couple of days that the ability to get back to that calmness of post-April might be a little more elusive this time. We'll see. Meantime, we're watching the banks. Helping us to break down what we've gotten so far this morning is Erica.
Hopefully the orb will hold.
Consumer Financial Analyst joins us this morning. Erica, thanks for the help today. Busy day.
Very busy day.
I wonder if you can help us, some of the qualitative stuff coming out of J.P. Morgan, almost even a split between Dimon's view and the CFO's view about the future for employment and hence credit quality. Are you surprised by anything we've gotten today?
I'm not really
Boys getting chopped
surprised.
around, guys.
Tricolor and other bankruptcies out there in the market. Investors are definitely more skittish. And I think that you might be seeing, in the reaction today is clearly the quarters from JP Morgan, Goldman, and Wells Fargo could be called standout, especially in some cases. But I think now, especially with some of the policy overhang, investors are wondering what are we missing? Is there a turn in credit that's about to come? And a lot of the conversation that's happening, Carl, is not as much about the consumer, and it's really about non-depository financial institution or NDFI lending. That's banks essentially lending, to shadow banking, and shadow banking is in turn lending to the companies. I think that was a big part of the discussion in a JP Morgan call. And I think the quote from Mr. Diamond is that if you see a cockroach, there could be others. And so I think that has been,
So
a big
it's a risky play on the order because he gave so much from the top,
So everyone should.
gave it 40 points, and now he's almost like you're buying a breakout.
look. I mean, we have to. Let me put it to you this way: revenues could be awesome from investment banking, loans could be growing, but credit quality deteriorating is the single most important and overwhelming catalyst for banks
You got to
to
clear
lose money.
4250.
So it is very clear that if there's something in the air, that's something that we should consider as we think about the go forward for these stocks. So NDFI, according to regulatory data, is now 14% of money center and large regional loan books. And like I said on the JP Morgan call, I don't even know what questions to ask about NDFI exposure as this has grown significantly. So this is certainly, something to watch, but the great news is that the banks are extraordinarily well capitalized. They're earning a boatload of money, which is the first line in defensive credit. And we'll see if there is a downturn who the good underwriters are versus the not so good underwriters.
Is this reserve build at JPM notable, or is that sort of within the realm of sort of reasonable quarterly business practice?
Yeah, really good question. I think that's pretty reasonable. Keep in mind that they did launch, Sapphire Reserve, which CFO Jeremy Barnum said that it's their best quarter for net new account originations ever.
I think
And
it's a
so
little, he's holding, but it's a little
credit
weak,
card
guys.
loans or, new credit card lines, that does have a pretty high reserve attached to it. So that's normal course of business. I think what everybody's looking forward is looking beyond the numbers that were posted this quarter and making sure we're assessing all the risks for the industry going forward.
Right. Is the Wells story simply a matter of having the shackles unleashed?
Yeah, absolutely. I think, first of all, with the asset cap behind them, investors were saying, we'd rather be long other stories, like a Citi or a B of A heading into the print. But what their outlook for returns on equity, which they said was 17 to 18% on a tangible basis, and the net interest income for the fourth quarter is saying to us, look, it is a big deal that we can grow a balance sheet. We could actually grow customers without any shackles.
Right under the
And
orb,
that's going
failed.
to deliver, better returns on capital. So I think we're just starting to see the beginning or the early innings of what new Wells could be in the future.
Just got back to JP Morgan to end here. I mean, it's not unusual for it to be down on earnings. I feel as though oftentimes they report a number that's fairly well reviewed, stock goes down, and then during the course of the quarter it moves up again. But is there anything else you think that is responsible for that decline of, 3.5% or so this morning?
So I think investors had probably, cleaned up short positions, very technical thing yesterday, sort of anticipating a better revenue print. And as I just think about the forward outlook for next year, they're pretty conservative. They tend to be conservative in their outlook. And essentially they said that consensus is pretty much in line for net interest income, but consensus was a little bit too high for expenses. And this is an interesting to note as you think about your broader discussion, David. They essentially said that 3 to 4% is a normal rate of, labor market inflation in terms of comp expenses. But again, I think the phrase, if there's a cockroach or other cockroaches elsewhere, could not have made investors feel great. But I'm surprised that read-through is to the stock of what we think is probably the best risk management out there versus hitting the rest of the group.
We'll look forward to Morgan Stanley B of A tomorrow. Erica, thanks for the help. Good to see you as always, Erica Najarian.
Absolutely.
A whole lot more on banks in the next hour as well when we talk to Wells CFO Mike Santomassimo. He's going to join us on Money Movers at 11 a.m. Eastern. Sarah?
Here's our roadmap for you for the rest of the hour, including a first on CNBC interview with European Central Bank President Christine Lagarde, talking everything from the global growth outlook to trade tensions between the U.S. and China.
Plus, New York City's office market, it's surging. Manhattan, in fact, seeing its best office space leasing rate since 2000.
Man, the longs are getting a bunch of setups. I need to get out of this. I'm not sure this is going to work on the short side. Yeah, he's looking better for longs than... I mean, I might get lucky here, boys, but... Might get lucky here, but let's see. Picking tops. See, that's why you don't do that. I'm gonna de-risk a little bit. This is a long setup. Okay, I need to stop doing this. I need to take a break. Chasing candles. Chasing candles. Not a good idea.
Welcome back. I am here in Washington, D.C. this morning, where I just spoke with European Central Bank President Christine Lagarde. We discussed her outlook for the European economy, monetary policy, and how tariffs are impacting her expectations for trade and development across the globe. The last time we spoke, it was back in April. Things looked very different right after Liberation Day. So I started by asking her if she's surprised by how resilient everything has been. Listen.
I have been quite surprised at how resilient our economies have been, and that has been the case in Europe. So we feared the worst and we had the bad, but it wasn't as bad as we had anticipated. In terms of growth, inflation, employment, I think that the economies have been very resilient and much more so than we had anticipated.
How are tariffs affecting Europe's economy?
Well, there is the direct impact and the indirect impact. In terms of direct impact, Europe has 17% of its trade with the United States. So it is the largest partner, but it's not a massive amount of trade that we do with the US. So it does impact, and tariffs between the United States and Europe have gone from 1.5% to 13%. So that's a serious add-on which has to be borne by someone, either the exporter, the importer, or the consumer. And the indications we have is that it's, at the moment, borne a third, a third, a third. And we'll see how that goes, because clearly the exporters and the importers are squeezing their margins in order to absorb this additional tariff.
So what you've said lately at the latest policy policy meeting is that you think monetary policy is in a good place. You stop cutting.
I think we are generally in a good place. So inflation is in a good place because we are at around 2%.
I'm gonna pause this, guys, because I don't think I can see an entry for myself in a while, so I'm gonna pause and come back.
A little bit up. Cannot necessarily predict with perfection, far from it. So we need to anticipate political development, geopolitical changes, the shift in global order as we have seen it, to understand how it impacts our world and our monetary policy.
How high is the bar for cutting now? What would make you do that?
I cannot say.
I'm trying.
I know you're trying very well, but no, it's as I repeatedly said, we are deciding meeting by meeting. We are data dependent. But when I say data dependent, we're looking at everything. We're looking at what the models produce. We're looking at what the empirical data reveal. We are applying some judgment as well to, as I said, capture some of the elements that are not easily captured by models.
So on the economic growth outlook, is it to the upside or downside right now? Where do you see the bigger risk?
I would say that it is more balanced than it was, and more so because some of the fears that we had in terms of, if you look at tariffs, we anticipated that there could be retaliation. There has not been retaliation by Europe, right? Uncertainty has abated. It's not back to where it was in pre-COVID, but it has abated significantly. And on the exchange rate front, we had anticipated that the euro would depreciate.
Went up a lot.
And it went up. It's in flux on a daily basis, but we did not have any of those risks materializing as we had anticipated. There are risks to the downside as well, supply chain disruption, additional trade disruption, and the current days are not showing us complete stability, but the risks are much more balanced than they were.
What about the risk to inflation now?
Again, we have both upside and downside to inflation, and we are monitoring very carefully where that balance stands. But I would say that it's fairly balanced at the moment.
You said that we don't necessarily.
Oh God.
On the trade.
Okay.
So the latest is tit for tat.
Max lost today $300.
How does that impact Europe?
And this is it.
When the US
Now.
and China go at it on trade?
There are direct and indirect impacts. Direct impacts is this business on rare earth and magnets. That impacts all countries in the world because there is no differentiation by China. China doesn't say it's directed at the US. It says it's directed at everybody.
Right. Europe needs
And of
them too.
course, we import rare earth. We import, those products on which China has gently over the course of time built that.
It's against the 200 on the 5.
So that's the
I'm gonna defend that.
Licensing, export restrictions are going to apply.
I'm gonna
to
fucking
Europe
defend
as
that.
it will apply to the United States. The indirect impact could be supply chain disruptions, and that we have not so far seen very much of that, but we have to remain attentive. And the final factor that sort of compounds everything is the level of uncertainty. When we hear leaders in that sort of tit-for-tat escalation until they eventually meet, which I'm glad they will, that raises the level of uncertainty, which obviously leads to apprehension on the part of corporate decision makers, on the part of employers, on the part of everybody, consumers as well, and you see savings go up as a result.
What do you want to see between the US and China on trade?
I would like some certainty. I think that's what the economic actors, players need. They want to know where they stand now and in the future. Because when you decide to set up a factory somewhere, when you decide to buy a new ship, when you decide to identify the line of shipping for your products, you want to know what the reality of tariffs will be going forward. My hope is that there is enough open trade with the tariff restrictions that the two countries will decide, so that the movement of trade and goods can continue in a reasonably balanced way. My concern is that if there is too much restriction in that line of trade between China and the US, a lot of the goods that would naturally go to the US will be diverted somewhere else, diverted to Central and Eastern Asia, but diverted to Europe as well, and that would have consequences for inflation.
We saw in the recent data, export data from China, Europe grew, Africa grew more than 50%. So is Europe doing more trade with China now?
The movement of goods has increased, yes.
Is that a good thing?
Not
We got
to the
$50
extent
back.
that we had feared again.
Let's
It has
go.
increased, and that's what we had anticipated.
Gotta be careful because the 15 is turning positive.
Because, for instance,
This
China's
is
building
strong.
all these factories for its EV plants in Europe, but then that crowds out some of the European automakers.
Well, I don't think that it's building all these EV plants.
If he comes here, I am shorting.
Countries where EV plants are being built, but we are seeing the world over some of those Chinese brands and Chinese-made EVs being marketed and
That I'm
sold.
okay
Yes.
shorting.
I mean, do you have security concerns, intellectual property concerns,
Of course. I mean,
dumping?
I
A
think
lot of
any-
confluences there.
Any trading partner has those concerns with all its trading partners. I've been a lawyer for 25 years of my life, and I
Those are
know
Chinese,
how
that's right.
intellectual
Okay.
property can be, gradually eroded, taken over, and a new factory suddenly pops up, which
That'll be a
trades on
safer
that
top to
intellectual
buy.
property. So I think that anyone in the trade who has security concern, intellectual property concern, is going to have to be on its guard, whatever the trading partner.
Do you worry about geopolitical implications, ripple effects of the tariff policies?
I think the tariff policies in and of themselves are going to create a readjustment, some supply chain modifications, and I don't know what is causing the other. I'm not sure that it is tariffs that will have an impact on geopolitics. I think it's more geopolitics that is deciding tariffs.
In other words, Europe is such a strong friend and ally for the United States. Do tariffs change anything on that front?
It changes things in the sense that a stable, well-anticipated relationship has been deteriorating. Let's face it. I believe that partners are strong enough.
Yeah, I jumped the gun.
Sufficient
FOMO is a
history
bitch,
of support,
but
partnership,
it's
and
okay.
friendship.
Got $50
So
back.
that can be
I'm gonna try another short right here, and then that's pretty much it, boys.
Can be agreed.
That doesn't
I think
work,
there
then I'm
are
probably gonna stop.
imbalances that needed to be discussed
I
and
let-
will be discussed
I
whether
let
it
my
is
emotions
or
take
in
over
during
today.
these IMF meetings. But equally, I think that a predictable relationship is necessary to restore the quality of this friendship and partnership that has been built for 2.5 centuries.
Did Europe give up too much in the latest trade negotiation? There's a deal on the table where Europe invests a lot, over $1 trillion in the U.S., and now pays 15% tariffs to sell into the U.S.
Look, I'm not going to characterize or pass judgment. What has happened, and now we deal with the economic consequences of it, and we have to do the best we can in terms of policies, and that's what I'm doing.
But it sounds like it's changed
If he
your attitude a little bit.
comes short of it, I'm gonna leave it
Still in
alone.
love with this country, but I hope that we can settle the relationship on good terms that are based on trust, predictability, and reciprocated consideration.
Christine Lagarde, the head of the European Central Bank. I'll share more of my conversation with her during Money Movers in the 11 o'clock hour, guys, including her take on the political chaos in France and those rising bond yields, the record gold price, whether there's an AI bubble, and much more. Some of the more market-based financial stability questions facing a central banker right now. But Carl, I thought she was really profound and sort of took a moment to really think about her answer there when it comes to the geopolitical implications and friendships around what's happening with tariffs and trade. She's been one of the few voices out for globalization and increasing trading and working together. So you could clearly sense that it's changed her attitude a little bit.
Yeah, that was definitely a thoughtfully considered answer to your question. No doubt there's interesting to look forward to more. Meantime, GM taking the staggering charge related to its EV business, and out with the new warning.
That's it, boys. If I get stopped out, I get stopped out.
Etsy, as we said, moving from the
He might be explosive too. This is very strong.
Gonna tell us why, break down their new
You can
holding.
tell there's some short
Don't go anywhere.
pressure there. Gotta hold this position, but this is gonna probably blow the top off. It's my last short position on this trend. If this clears that, I would be, I'm gonna stop picking the stops. So strong. So strong. Scary. Wow, this is so scary. It's gonna fail, boys. I mean, I thought it would fail for me. I still can, but this is a better pullback on the 5 that I was thinking is gonna happen. Was going to happen, you know? That's good. Okay. I'm gonna hold these guys out. Sell one at 55, and then sell one at 55 and hold the other one.
30 minutes into the hour, 3 big movers we're watching today. Company Ericsson surging on an earnings beat, driven by cost-cutting measures and the sale of one of its U.S. subsidiaries. GM set to take a $1.6 billion hit after adjusting its EV plans, saying in the release they, quote, expect the adoption rate of EVs to slow and that the reassessment is ongoing, which means additional impacts are possible in the future. Domino shares
I might not get my target because this people are eager to buy.
carry out a delivery across all income cohorts. By the way,
Sell
here's the
more.
CEO later tonight on Mad Money at 6 p.m. Eastern Time.
After the break, the CEO of Etsy is with us, breaking down their new partnership with OpenAI and the big move from NASDAQ to now trade right here on the New York Stock Exchange. She's going to join us next. Plus, stocks are seeing pressure this morning as China
Okay.
pushes back against
Getting that money back.
with new sanctions.
I don't have a lot of bullets left, boys.
Hear from U.S. Trade Representative Jamison Greer about what is next.
I don't have a lot of bullets left.
Don't go anywhere.
Yeah, that was the only top I should have bought. The only top I should have bought. maybe a second touch, watch to see the reaction, you know, and if it's negative reaction, go to the downside again, because I knew that would be a strong spot. It's the lower day of Monday, which it touched 2 times and is intersecting with the daily. Let's see. Daily trend line. This is the 5. Yeah.
It's good to see you at the exchange. Sorry I couldn't be with you today.
Triple top.
But you guys characterize this as the new chapter, the next chapter in Etsy. And when I think of the sort of eras that I've covered in Etsy's life, it's the growth in the beginning, it's the COVID era, and now you're kind of in your new AI era. Talk a little bit about that and why the move.
Yeah, well, first, with the move, we're so excited to be along many of the most respected and innovative companies in the world on the New York Stock Exchange. And I think it is an incredibly exciting time for us as we enter our 3rd decade. So many of the trends, particularly with AI and generative AI, are unlocking incredible new potential for Etsy to achieve our mission even more powerfully than we've ever been able to do before. Etsy is about keeping commerce human. We connect over 5 million sellers with over 80 million buyers. And it's the combination of technology with humans that's so powerful.
If this gives, it's gonna give explosively. That's why I don't want to be too big over there.
Combination of technology with humans. So we think it's a nice symbolic moment for this exciting next chapter for Etsy.
Speaking of the stock exchange, is it harder to be a public company? And while your stock has done very well, it's obviously way off the highs that we saw during COVID. Is it harder to be a public company and to invest in a new chapter of growth around AI, really sort of double down in that kind
I don't like it, boys.
technology right now?
I love being a public company. I love accountability. We have a really accountable culture at Etsy. And,
Yeah, I knew it.
we care about are the ones who believe in our future.
If it was, it would be explosive.
Future ahead. And so
Okay, so
making in
let's see.
right now can not only drive a lot of productivity,
Let's see what's gonna happen now. We're gonna go from there now.
help them to become more productive. With Etsy, what I'm so excited about is it's also going to help drive the top line because it helps us fulfill our mission even more powerfully. It helps us to become so much more personalized than we could. And to answer questions like which of these items is the most artisanal and the best fit for you, things frankly other e-commerce companies are not worried about, are uniquely benefited by AI. And so I think the future for Etsy is very bright.
There's an item on the tape this morning about Walmart and ChatGPT. How do you see this sort of disintermediation working out, where you can simply say, get me those brown shoes that I saw the other day on the street?
Yeah, I think that Etsy is disproportionately positioned to win in a world of generative AI and agentic commerce. So many of my peers are coming from a defensive stance where they're worried about these chatbots because what the chatbots are going to do is they're going to scour the web and they're going to discover that the item for sale in this place is for sale in 50 other places, and now it's just going to help you find the very cheapest version that'll arrive the fastest. On Etsy, we've got over 100 million items that are genuinely unique and special, made by the maker just for you. So we have something really unique to offer. And in that world, I think these chatbots are going to surface Etsy very often as a great alternative. And I think ultimately we are a real winner.
So that notion that it's so good at curating and finding the lowest price, hence margin compression, you see yourself being protected somewhat from that?
I think so, because what an agent is going to want to do is not present you usually with one answer. It's going to want to present you with a few choices. Here's the cheapest thing you can buy. Here's the thing that's going to arrive the fastest. And then maybe here's the thing that's the most special or unique. And in that world, I think very often Etsy gets presented as one of the most interesting options. And I also think it's going to be able to provide us so much more context. These agents are going to know you really well. And so where often people show up on Etsy and they give us maybe 3 keywords, a chatbot is going to be able to give us paragraphs of context about who you are and what you like, your tastes and your preferences. Is this just for you or is it a gift for someone else, for example? And we can do so much more with that in that world. That's why we are on offense. Gift for someone else, for example. And we can do so much more with that in that world. That's why we are on offense here. And we're partnering with many of the leading model builders
in their very first launches, we have a seat at the table to help define what this future is going to look like.
I think I am very wrong on the price chase. It's hard. All the good setups are done already, and then you have to like buy tops now. It's just, it is pretty insane.
Positive for humanity. There are certainly risks we have to worry about. But in my experience, the technology evolves much faster than humans and business processes evolve. So what the technology is going to be capable of doing is going to be far in advance of what we are prepared to adopt. And so these changes are actually going to evolve over a longer period of time than I think some people might be thinking, but ultimately their power will be terrific. And so for Etsy, for example, we're about an individual maker of over 5 million sellers. Most of them are a business of one working from their home. And these new AI technologies are going to allow those makers to connect with tens of millions of buyers even better and be able to create a human connection, be able to create a feeling of friendship and community in a world that can feel more anonymous. So I think that this technology is going to superpower Etsy to make
scale
the
a lot of
brighter.
businesses very easily, I guess.
A lot of businesses. And in a time when there's so much macro uncertainty, one thing we've seen is Etsy is so resilient. We don't have complex supply chains like so many other people do. And so I think, again, this technology is going to help our sellers with their resiliency come meet the moment time and again when consumers really need us.
That's just where I was going to go, Josh, which was the macro uncertainty and the tariff question, at front and center again today. If we see 100% tariffs on China, as we continue to see higher tariff rates across the globe, how's it impacting you and your products?
Etsy has been so resilient through pandemics and supply chain shocks and so many things. We have over 60 million items made by U.S. sellers available for sale for U.S. buyers. And then we've got tens of millions of other items available from other countries. The vast majority of our supply outside the U.S. is in Europe, actually. We have very, very little supply coming from Asia. And we've worked really hard with our sellers outside the U.S. to help them understand how to comply with the tariffs and do it in a way that minimizes cost and makes sure that packages travel quickly. So I think over time, Etsy will be very resilient to this, and our value proposition will get stronger relative to our competitors.
Josh, really good to talk to you about all the AI excitement and everything else going on. Josh Silverman, the CEO of Etsy. Thanks
for your time.
Thanks, Josh. All right, New York City is back. Yeah, at least according to our next guest. RXR Scott Reckler joins us. He'll explain why right here at Post 9 after the break.
It would be nice if the price stays here, this catches up and meets right there. That would be something that I'm a lot more willing to buy. This is pretty extended. Try to buy this dip again. Might be on the EMA, might be a little risky. But you can't fight the trend though.
don't lose sight of some of the other earnings results that may give a read on the economy. One of those stocks has been anything but trucking to the upside. So is there a way to get it out of reverse? Tune into our Market Navigator segment later on today on Power Lunch for more on that trade, 2 p.m. Eastern Time.
Demand for New York City's office market reaching levels that it has not seen in decades. The Wall Street Journal reporting today, Manhattan's leasing activity just hit the highest level it's had since 2006. More than 23 million square feet leased in the first 9 months of this year. RXR Chairman and CEO Scott Wexler, he's one of the city's largest real estate owners, joins us now to talk about that. And Swede sometimes gets you some other things, but good to see you.
Good to see you too.
I mean, I can remember us having plenty of conversations, and they usually started on a fairly morose or dour, or however we want to describe it.
That way, Patrick.
No, but I'm surprised at the level of optimism in the store today and/or the numbers themselves. Are you surprised?
Listen, I've been living it, so I'm not surprised. And even your last guest, everyone's talking about this AI revolution, right? And you think about what makes companies successful in AI, it's compute power and people power. And Manhattan office buildings are the people data centers of the AI era. And so what we've seen is this big surge of companies that are looking to grow. They need the talent, and to be able to attract the talent, they need the best space that's well located, that has the best amenities, and they want to be in a city like New York that has this incredible ecosystem that brings together capital, people, customers, all these diverse industries, so domain expertise that really you can't replace anywhere else in the country.
Yeah, that would seem to be the case. Now, we've talked often, though, about the divergence between the A properties and everything else. And even during the tougher times, not that long ago, the best properties were still garnering significant leases. Has that changed? Are we starting to see it trickle down now, given the scarcity?
I'm gonna wait for 5-minute candle too.
In the first 9 months of this year, there were 140 leases.
This might dump.
Which is as many as,
Yeah.
as all of last year.
Let's wait for look at that 5.
Space, of high
Yep.
quality space, you're starting to see it
This
trickle
might
down
dump.
to a degree.
It's gonna dump hard now.
Obsolete. The good news there is there's other alternatives, right? There's things like conversions we spoke about in the past, and there's been some good public policy put in place that specifically this 467M, which provides tax abatements that really has broadened the aperture of what buildings you can actually convert. And
So you can get more capital potentially to work, because some of these, as we pointed out, are very expensive.
That's right. And so now, because of this basically it's like 90% tax abatement for 35 years. So things pencil out they didn't. So we're, for example, converting 5 Times Square, a building I never would have imagined that we convert to residential, into 1,200 units of residential. And so there's right now like something like an estimate of 20 to 40,000 units of residential that will come from office buildings, which is 20 to 40 million square feet of
Well, the
space.
shortage of housing certainly played a role and continues to play a role in the upcoming mayoral race here. It's certainly one of the key reasons why a socialist was nominated to be the Democrats' nominee. What's he going to do if, as seems likely at this point still, unclear, but likely that he will become the mayor?
Listen, I mean, New York's in a unique spot, and people don't appreciate it. Like, different than LA and San Francisco, a lot of the governance and oversight of New York City falls to the governor, right? You can't raise rents, you can't raise real estate taxes, you can't raise taxes, fiscal responsibility, public safety dollars. That falls with the governor. And the governor's been very clear that she's not going to let a mayor come in and raise taxes.
Somewhat like this, but it's my yeah.
There's a committee.
We might get squeezed out again.
And he's been pretty clear that he wants to freeze rents. Now,
I just like the triple top with the wicks there on the 5. This might be where he turns around a little bit.
more housing. And so, the hope is if he becomes mayor, we got to convince him.
You talk to him?
I've met with him. He's come to my office.
What do you
and
think?
Listen, I think he's moving away from a politician running for office to someone that's got.
Wow, guys.
Mario Cuomo used to say, right? When you politic, you do that in poetry and you govern in prose, right? And I think he's trying to get there now. The proof's going to be in the pudding.
Yeah.
And as someone who loves New York, I'll do whatever I can to try to help him be successful. When he's not doing the right thing, I'll make sure he knows that we don't think it's the right thing. But we got to hold the governor accountable. If things go bad in terms of public safety, that's probably the biggest risk to the city. And if we need help, we may return to the president.
Yeah, we might. Although, I mean, to your point, he will have a lot of influence over the NYPD. So the mayor does.
And I think that's the area when I spoke to him, like that's the most critical thing, right? If he loses,
Okay, this is it for me.
make sure that this city feels safe, is safe, and that the NYPD is behind him, because he's going to be a one-term mayor.
I don't want to paint a completely positive picture, although, again, even back to work statistics, I mean, everything Manhattan sort of sets itself apart right now. But listen, you've had your share over the last couple of years of defaults, whether it was 61 Broadway or 340 Madison or 230 Park. I know you're only a minority stakeholder in One Worldwide Plaza. But there have been some bad news still, Scott. Is that going to continue for some of these buildings that are not the way you just described, sort of the ones that are in favor?
Listen, I think we've been one of the most acquisitive investors in New York office buildings, right? We've bought 7 million square feet of New York Class A office buildings since the last 24 months. And even, the buildings that we've gone through that have been what I'll call Class B, we used to call them, remember, film versus digital in our Project Kodak, like 61 Broadway, we ended up restructuring the debt and buying it, at cents on the dollar and now converting it to residential. Right? So the key in these moments is don't put good money after bad. Make sure that you use this dislocation as an opportunity to invest and be ahead of it. And
Wow, the market is killing me.
that ultimately will actually be at the intersection where that AI demand generation is growing.
Killing me.
You're going to be in a situation where you're going to do great. And you look at New York right now, what's amazing is the tenants are leasing like they haven't ever before. Right? So they go back to like this 2006 era. The lenders are lending to New York office buildings like they've never before. But the institutions aren't buying. Right? Institutions are, and you talk about data centers, every institution wants to invest in data centers.
Yes.
No institution wants to invest in New York office buildings. To me, that's the time then to be an investor in New York office buildings because you don't have
Well,
the
why are they
competition.
afraid?
Because they have legacy issues. There's data centers is the flavor of the month.
Yes.
And this is a way, frankly, that you can actually play AI in a city like New York because it's driving this economy, but at prices that are 30 to 50% less than where the peak values were.
Well, your optimism over those dark periods when we'd have you on and was, or at least so far, has been proved correct.
And before,
Scott.
I just want to say
real
one
quick,
more quick thing, which is as a New Yorker and someone that looks at Israel as a sixth borough, I think we got to just say thank you to the president for bringing home the hostages and our 2 other New Yorkers, Jared Kushner and Steve Witkoff, for the role they played. It's great to, pride in being New Yorkers and in the real estate industry. You can do a lot in the real estate industry.
Who knows? You may be negotiating the Ukraine war at some point. Scott, thank you.
Thank you.
All right, Scott
Appreciate
Rick.
Yeah, really nicely said. As we head to break, quick note, there's still time to sign up and join me tomorrow. The Invest in America Forum here in Washington, D.C. It's a one-of-a-kind gathering convening the biggest names in business alongside key government officials to talk policy and more about what business is doing, doubling down on America. Visit cnbcevents.com/invest to learn more and to attend. Plus, we've got more here from D.C. in the next hour. U.S. Trade Representative Jameson Greer joins me as China strikes back with sanctions of its own this morning. We're back in a moment.
yeah, guys, big tops and bottles did exactly what I never do, and I got my setup right here. Started the day $120 something green, and then ignore this cross. Just a lot of risk, couldn't go. Did not see the reclaim of the orb. I should have come in here just for a small risk. That was the trade of the day right here. Of course, right? Because you see these going up, but it was actually pretty obvious. As soon as I see it on the 2 minute, yeah. As soon as it did the orb here, 15-minute orb, he reclaimed it. So that this is not 55, 96, 50, 75 actually, with the risk of 93.25 low, but it was like a 3-point risk. That was a beautiful trade. Missed that one, and then just let my emotions take over. Just closed my last position that I could buy with my cash account, and I'm $460 red. So my wins are always smaller than my losses. Smaller than my losses, and it's not the way to trade. Well, good luck to you guys. I'll see you tomorrow.